Mayuresh Joshi, fund manager at Angel Broking, joins me on the link from his office. Mayuresh, great to have you. Thanks so much for joining us. It's a tough way to start the week on this note, but I am going to ask you, what's weighing down sentiment most? Is it the fact that we are going into F&O expiry, China, P notes? What would you blame today's weakness on?
Afternoon, Mini. I think it's a combination of all these factors. So I think the international markets, the way they are behaving, the Chinese route that we're seeing almost 8% down, concerns weighing on the P note issue, and clearly I think the Exchequer has put forth his statement that coming down to a foregone conclusion is not that the right thing to do. But again, I think there are jitters on the markets on the international side, and even domestically, as we've been pointing time and again, I think if the passage of the bills does not happen in this session, it will definitely impact sentiments for the market going forward, coupled with the fact that earnings expected to remain weak for a couple of factors. So I think a combination of all these factors weighing down on our own markets as well.
Mayuresh, I'm going to go through a couple of sectors which are bearing the brunt of it. Of course, metals, nothing has gone right for it, but you see how we've seen an exaggerated sell-off in Tata Steel, Hindalco, Vedanta. Pretty much every one of these stocks is battered. How much of a downside do you see here?
So clearly, Mini, I think the commodity cycle, which is on the downside, is here to stay at least for a couple of quarters. The Chinese slowdown is a well-known fact, and again, I think the demand-supply situation plays front on terms of realizations of key commodity prices. So steel, lead, zinc, copper, all will feel the brunt for the next 2 quarters, to say the least. Again, the kind of inventory built up that we're probably seeing even on the LME level, I think even on that count itself, I think the realizations expected to stay low, coupled with the fact that a lot of dumping will happen from the Chinese markets and even the Russian markets, considering the devaluation of the ruble that we've witnessed. Southeast Asian economies have already seen dumping of these products come through. And even Tata Steel Europe, to be more specific in Tata Steel's case, would see EBITDA per ton compress going forward as well. So I think weak numbers expected for these companies over the next couple of quarters and no recovery seen. So I think if an investor really has a long-term horizon, I think we have to elongate our time horizon for commodity companies to at least a couple of years. If that is not the view, I think the commodity cycle is not going to get over soon. So I think the next 2 quarters, to say the least, the earnings will get impacted for all these factors.
Mayuresh, Reliance, despite having a pretty good set of numbers, the stock is continuing to be weak. What do you see this weakness owing to?
So clearly, I think it was a decent set of numbers in my opinion. Again, operationally, if you look at the other income component actually going down, I think that was a decent set. The petchem margins should hold, in my opinion, over the next couple of years. And Reliance, again, as we've been discussing time and again, it's not a quarter-on-quarter story. A lot of these projects are expected to get commissioned by the 4th quarter of FY16, the 1st quarter of FY17. So I think once these projects start coming on track, the earnings momentum will be seen in Reliance in a very positive manner. Clearly, again, I think petchem margins, in my opinion, should hold up over the next few quarters. The refining margins, the GRM did surprise, and again, I think whether that is sustainable, because looking at Singapore GRMs currently, I think it's a whole lot of combinations that you need to work out with gasoline cracks, naphtha cracks, how the rupee behaves against the dollar over the next few months. All these will be key deciding trends. So in my opinion, I think the numbers were decent. The core capex that the company has done towards its refining and petchem segments should start bearing fruit from FY17. But again, I think one needs to have a long-term view, and we remain structurally positive with a long-term perspective on Reliance.
Indian Overseas Bank is leading the decline in the public sector banking space, Mayuresh. Some big numbers expected tomorrow. All eyes will be on the NPAs. What's your house call on PSU Banks, and would you stay away from it?
So clearly, I think the asset quality cycle has not turned out for the better for a lot of these PSU banks. Having said that, a lot of the mid-cap PSU banks are also short of capital. So I think capital adequacy also becomes an issue for a lot of these mid-cap banks. So I think coupled with the problem of asset quality not improving and capital adequacy not being up to the mark, the balance sheet expansion looks very unlikely. And though valuations are extremely lucrative for a lot of these banks, I think these concerns will keep on weighing at least for the next couple of quarters. So within the space itself, I think State Bank is something that we continue to like. We continue to like that. I think it's got a very strong CASA ratio. The capital adequacy is very strong, and they're probably doing the right steps in terms of containment of fresh slippages, and even when restructuring is concerned. So I think if I need to pick and choose within the PSU banking lot, State Bank is something that we'll continue to prefer.
Three mid-cap stocks that I'm going to ask you, a bit to small-cap stocks, Mayuresh. One is Geometric, post the numbers. The stock is up 11%. Take Solutions, we will be getting the management shortly. That's up 6%. And Rajesh Exports, $400 million acquisition. That stock's been on a roll for the last year. What's your take, if at all, on any of the stocks?
So clearly, as a disclaimer, I think we don't cover that many, very difficult to comment on these, but generally within the IT space, our take is that the top tier IT companies is something that we continue to prefer over the mid-cap IT names. And though the numbers might be a little bit better for a few of these companies on the mid-cap pack, our take is that in terms of constant currency revenue growth as well as volume growth, the top tier should perform much better. So I think Infosys, HCL Tech on declines, I think they remain one of our top picks within the top tier IT names.
Okay, Mayuresh, Tech Mahindra comes out with numbers. It had come out with a warning, but that stock is up on a day like this. What is it owing to? Because the other two companies that came up with warnings, Persistent and KPIT Technologies, both did well. Not that it's a apples to apples comparison, but are you expecting that Tech Mahindra won't be as bad as the management has painted it to be?
So clearly, I think they are going through concerns, and their organic communications business, which accounts for 52% of their top line, is seeing some amount of compression. So clearly, I think the profit warning is on a very valid note and ground. But the enterprise business is where the management is very hopeful about. You've seen strong earnings momentum happening over the past few quarters, and the management feels that the enterprise business should hold up for the next few quarters as well. Having said that, I think the numbers more or less after the profit warning came out, or in expectation of how the numbers would pan out, I think the stock did witness a knee-jerk reaction. So I think the EBITDA margins would see compression on two counts, visa costs going up, and again I think the utilization levels will be a key monitorable. But clearly valuations in support of Tech Mahindra at the current juncture, trading close to 13.5 times FY17, which we believe is very, very attractive. So our take is that the markets have just stated that the first 2 quarters from Tech Mahindra will be on the softer side. They are looking at cost optimization and earnings momentum to pick up from Q3, specifically from their enterprise business. And even on the telecom part, I think once the capex plans of a lot of these companies start moving up over the next few quarters, even that segment would have some amount of business traction. So our take is that we remain positive on Tech Mahindra. So after the result of it declines, I think it becomes a good opportunity for long-term investors to actually start entering and accumulating this.
Right, Mayuresh, stay on with us. We're going to take two news updates because this is also a time for money raising, stake sales and fresh paper coming into the market. The fundraising drive continues. The government is getting set to offload 5% in PFC at 254 rupees per share. The PFC OFS has been fully subscribed. My colleague Khushbu Shah joins us with more on this. Khushbu, take us through it. Of course, Shraddha also joins us on the Syngene IPO, which opened today. So let me start off with you, Khushbu. Oversubscribed, so no worries over there in terms of demand.
Rightly said, the OFS is oversubscribed. 20% of the issue size was reserved for the retail investors, but retail is seeing some subdued response. Talking about retail, it's about subscribed 1.01 times. General is subscribed 1.5 times. In total, if we talk about the subscription, it's subscribed, the OFS is subscribed 1.4 times, and the indicated price for general is at 254.11 per share versus the floor price which was set at 254 per share. Talking about the holding of the government after the sale of 6.6 crore shares representing 5%, the holding will reduce to about 67.80% from 72.80%. And also PFC is only the second PSU to be divested after RDC, which was divested in April, and it is the first under the modified OFS rules of SEBI, wherein the companies are allowed to disclose the stake sale plans 2 banking days ahead of issue. Back to you.
Shraddha, what are the brokerages saying on Syngene?
Well, yes, Mini, I'll just start off by taking names of some of the anchor investors for Syngene. We have Government of Singapore, Oppenheimer, Emerging Markets Innovators Fund, we have BlackRock India Equity Fund, all of these besides some of the domestic mutual fund names. If I talk about what the brokerages are recommending, there's a mixed bag there. ICICI Securities has a subscribe on it. What they've said about Syngene is that the company is well poised to cash in on that growing R&D outsourcing trend, and also Syngene enjoys a high recall value. Way2 Wealth is another one which has a subscribe on that issue. They're bullish on the company's increasing clientele, expanding facilities, and also on account of that forward integration into commercial manufacturing. We have India Nivesh. What they've said is that Syngene will be the only company in the listed space for CRAMS and biopharmaceuticals, and they're recommending a subscribe for a 15 to 20% near-term gains. India Infoline and Angel Broking, both these have an avoid on the issue, citing high valuations, which leaves a limited room for upside. Also, according to Angel Broking, in the higher price band about 250, the stock will be trading at close to 23 times forward earnings compared to the average PE of 17 to 22 that the global peers are seeing. So, an expensive stock there. And in terms of subscription, the IPO has been subscribed close to 6% till 12 p.m.
Right. So early days yet for that IPO, but let me quickly get Mayuresh into this. Mayuresh, PFC's OFS heralds the beginning of a government divestment drive where it hopefully will get a lot of money, but markets have turned volatile. And then, of course, Syngene IPO is also the first of many IPOs that are lined up, including Cafe Coffee Day and Indigo Airlines, the big ones out there. How are you viewing the action in the primary markets very quickly?
So clearly, I think the appetite for good quality paper will always be there. So on a case-to-case basis, I think if the valuations are attractive and the earnings trajectory look quite stable, I think the IPOs will get the response that they desire. When you're talking specifically from the two IPOs that are there today, our take is the two OFSs that are there today. I think the PFC is one where we think that the structural story should continue over the next few years. With government reforms taking place, the ATC losses should probably come down over the next few years, and clearly I think at the current valuation seems extremely attractive. And Syngene, I think we have put our note out. I think valuations clearly on the higher side when you do a global check. Yes, I think they do have ambitious plan when it comes to capex going forward, but again I think we'll wait for listing, and if it corrects post listing, I think that will be a better entry point, and if the stock corrects, I think the P multiples can come down at lower levels, which will be attractive, but I think it's an avoid on the Syngene IPO from our perspective.
Right. Thanks so much for that, Mayuresh. We also had Kiran Mazumdar-Shaw from Biocon, who said that the Syngene IPO will be a game changer for her company. Listen in.
Syngene has, been extremely successful as a